right, thank you. Wow, that's a lot of people. Maybe a bit of an unusual question to start a tech conference in Berlin, but did anyone by any chance bring some sunscreen? I mean, thank you very much. I'll catch with you after the session. Amazing day outside, hopefully also a great day inside with lots of good conversation and connection. Now, the theme of this year's conference is around shifting gears and navigating change in the marketplace landscape. Because if you think about the last 12 months, I think one thing that has become increasingly clear is that change is the only constant. And change often goes hand in hand with uncertainty. So with that, the question for you as a founder is, how do you manage such an uncertain situation in this changing environment? And those are some of the topics that we will talk about today. And I think we have some great founders who can really talk from experience on how they did that. Now, for this particular keynote, I will first reflect a little bit on the changes that we have seen in the fundraising environment. And we'll see that it's actually still quite hard for startups, and especially marketplace businesses, to raise new capital. We'll then kind of like look into the past, and we'll look how some of the household marketplace businesses like Airbnb and Etsy, how they managed uncertainty and how they adapted their strategies that helped them to eventually become the global platforms that they are today. And finally, I want to also give a glimpse into the future as we talk about two trends that we think have a profound effect on the future of the marketplace landscape. And also these topics will be discussed in more detail in various other panels and sessions here at the conference. So first we'll talk about AI and the way how it revolutionizes the way how we connect, how we transact, and how we create value. And then we'll talk about the rise of Gen Z, the new generation that becomes increasingly more important in our share of wallet. And we'll talk about why this generation is very different and brings new characteristics that are very important for you as a marketplace founder to understand. Now, I think amidst change and uncertainty, there's a common thread, which is resilience. And many marketplace founders had to weather difficult storms. We'll hear hopefully great stories about that today. But many also emerged and came out stronger. So I also personally hope that today will be a little bit about inspiration, about innovation, and the ability to change gears when needed. Next slide. This one, I guess. There we go. I'll go to the first slide very quickly, but for those of you who don't know Speedinvest, we are an early stage pan-European investor. We typically invest 250K to about 2 million in predominantly pre-seed and seed rounds. And we've been around since 2011 and have a portfolio of more than 300 companies. I think that more importantly for today, we actually built like a very dedicated team investing just in marketplace businesses, and all of those people are here today. And over the last 6 years, we built a portfolio of more than 55 marketplace businesses. So if you are building a marketplace business, which I pretty much assume, given that you're here in the room, please make sure to reach out to us. We'd love to learn more and hopefully partner with you into the future. Now, for those of you who were at the MPC last year, you might remember that before we start to talk about the changes in the venture capital market, we first looked into the public market for the simple reason that whatever happens in the public market usually trickles down to the private markets as well. And as you might remember from last year, it was actually quite a dark picture. We actually were at the end of a very long bull run that basically started at the end of the global financial crisis in 2009. And we saw the Nasdaq for the first time decrease by more than 30% from its peak of around 16,000 US dollars to about 11,000 US dollars, a drop of more than 30%. And actually an absolute level of decline that we did not witness in the whole preceding 12 years. This is also a very, I would say, broad-based reduction in tech. It touched all different sectors in tech. And 4 out of the top 8 companies in the Nasdaq actually saw their share prices decline by more than 50%. Now, this here is an updated version of that slide. And I think there's 2 interesting takeaways here. Takeaway number 1, the Nasdaq actually did a pretty good job in recouping a lot of its losses, as it's currently is hovering around 14,000 US dollars, maybe a little bit later today, but or later these days. But they actually made great progress and grew by more than 30% this year, year to date. The second takeaway is, if you zoom out, tech is still on an incredible run. I mean, all in all, we're now 12, 13 years into this journey, and you see that the Nasdaq, which is ultimately the leading technology stock exchange, is up by more than 10x. We also wanted to revisit the marketplace index, which is an index that tracks the performance of the top 65 global marketplace businesses that all have a market cap of more than $500 million. Now, this index in the last, or this year also made quite a big improvement, growing by 16% year to date. And although this is a little bit more modest than the progress we saw in the Nasdaq, it's still a positive takeaway in the sense that both technology companies in general, as marketplace businesses specifically, had a pretty good performance over these last 12 very difficult months. At the same time, I think that story of this progress of these indexes tells only half the story, because if you look a little bit under the hood, you see that the performance of these indexes has been really driven by a few strong outliers that determined the index's performance. So in the Nasdaq, you had 7 clear winners: NVIDIA, Meta, Google, Microsoft, Apple, Amazon, and Tesla. And similarly, in the marketplace index, we saw companies like Netflix, Zomato, which is like an Indian-based food platform, Booking.com, and Uber really drive the performance of the overall marketplace index. While at the same time, more than 50% of the companies in that index actually saw their share prices decline. So with that, I think, comes a much more like nuanced picture. You know, there's some good news, some bad news, but all in all, there's still a lot of uncertainty when it comes to pricing marketplace businesses. And we saw this uncertainty also kind of reflected in the market for IPOs. I mean, effectively, the IPO market for tech company has been dead for 12 months. And it was not before actually last week when we saw the IPO of chip designer ARM that we saw the first light at the end of the tunnel. Now, of course, the big news this week was the IPO of Instacart, huge marketplace business that went public on Tuesday, saw their share prices pop with more than 40%, and I think they ended their first day of trading at around a gain of 12%. A pretty good start for this business on its first day of trading, but at the same time, their current valuation of roughly $11 billion US dollars is still a far cry from the $39 billion valuation that they had in their last private financing round. So, still quite some uncertainty in the public markets. So what then happened in the private markets, or more specifically in the markets for venture capital, which I think is very relevant for everyone here in the room? Well, if you look at the last 6 quarters, you actually see that it has become significantly more difficult for startup companies to raise venture capital. Now, on the left-hand side, you see the amount of dollars being invested in the startup sector, while on the right-hand side, you see the number of rounds that actually happened. And if you simply look at the numbers from the most recent quarter, so Q2 of this year, you see that there's a roughly a 50% decline in terms of year-over-year capital invested in startups. At the same time, also close to 40% less financing rounds have happened. Now, the biggest reduction in terms of dollars invested is actually in the later stages. But interestingly, you can also see that the reduction in the number of financing rounds is actually very broad-based, with also like angel rounds and seed rounds actually showing quite a big decline. So I think the big takeaway of those slides is that it has not only become significantly harder to raise venture capital and there's less dollars available, at the same time there's also a sort of flight for quality with ultimately less startups being funded. Now this is kind of like the European equivalent of the previous slide, and it shows a rather similar picture. You know, year to date, European startups have raised roughly 26 billion in venture capital. And if we were to simply extrapolate this towards the end of the year, we might end up at roughly 50 billion, which is in fact like a 50% decline from the numbers that we saw in 2022. And actually puts us more on track on numbers that we last saw in 2020. Now, of course, here in the room, we're all into marketplaces, so we also want to look into how does the European investment landscape in marketplace businesses look. And actually, this picture is a little bit more stark in the sense that we already saw quite a big decline from the peak year in 2021 to 2022. And this year, we'll probably be on track for something like 7 billion of euros invested in marketplace businesses in Europe, which actually puts us more in line with numbers that we last saw in 2018. Now, a logical consequence of that is that we also see less of these mega financing rounds happening for European marketplace businesses. And in 2021, we saw about 21 of these 100 million plus financing rounds in Europe. In 2022, we only saw 12. Luckily, 2 of them are Speedinvest portfolio companies, with GoStudent and Coach Hub. But this year, we've only seen 3 to date with NPAL, Flink, and Get Your Guide. So if you were to read the media and see what it would have written about European marketplace businesses over the last 12 months, it would be quite a bleak picture, especially most stories covering layoffs and crumbling valuations. At the same time, we also want today a little bit to be about inspiration, right? So what we see more recently is actually more and more pockets of positive news emerging in the tech sector, with some journalists citing that we actually have seen the end of the bear market, and actually that the job market for tech roles, especially in AI, is stronger than ever. And also, of course, that the IPO market for tech companies starts to open up. Now, let's pause for a moment and reflect a little bit how this narrative of the private and public capital market aligns with our overall theme of the conference, which is navigating change and handling uncertainty. Well, what should have taken away from the previous discussion is that the fundraising environment over the last 12 months has dramatically changed for most marketplace businesses. And we came from a situation where there was a lot of abundant capital, and we're now in a situation where, frankly, it becomes much more uncertain whether you will be able to raise your follow-on funding. And this is just one of the uncertainties that you, as a founder, will have to manage. Now, in 2010, Warren Buffett said, "Uncertainty can be your friend." And I think with those words, he reminded us of something that's actually very important. Uncertainty in itself is not always a negative. In times of transition, uncertainty can also be a catalyst for innovation and for change. And to that end, we briefly want to touch 2 different marketplaces that we believe can be served as a source of inspiration for you on how to navigate change and uncertainty. First up is Airbnb. Now, Airbnb was founded in 2008, and that was in the midst of the global financial crisis. And the founders identified an opportunity to offer a cheaper alternative for a roof and a bed for the night. Their kind of thesis was, well, people might not have the money to spend on a fancy hotels, but they might be willing to pay a more affordable price to stay in someone else's apartment. And what kind of like started with a very modest goal to actually accommodate attendees of a design conference in San Francisco ultimately evolved by expanding on this original customer base to a global marketplace juggernaut that now has about 4 million hosts worldwide and covers accommodation in more than 100,000 places. Another area where I think Airbnb did an excellent job in navigating uncertainty was actually in the way how they handled regulatory challenges. Because the bigger the company got, the more they got scrutinized by hospitality regulations, tax implications, zoning laws. And the company put in actually a lot of effort to be able to thrive in such an uncertain environment. So for instance, one thing that they did was, in 2016, they launched the Friendly Buildings program, which was a program where they partnered up very proactively with landlords of bigger apartment buildings to make sure that they could offer their apartments to Airbnb within the context of the regulatory framework. So with that, Airbnb didn't only make sure that people were following the rule of law, they were also building the size of their supply side at the same time. Now, another example of Airbnb that we actually did not put on the slide, but I think it's interesting to mention, is that the founders have also been very creative when it came to navigating uncertainty in the fundraising environment. Because in 2008, there was not that much capital available, and in order to finance their business, they started to sell cereal boxes. They sold cereal boxes in the run-up to the US presidential elections, where they had two different kinds of cereal boxes. We had one kind that was more focused on Barack Obama, and the other kind that was more focused on John McCain. And they made them, I think, $40 US a pop, and they sold a bunch of them, and with that they created kind of like $30,000 US in terms of money that they really used to bootstrap their business. Now, just to be clear, this is not advice to start selling cereals. But it is, I think, a very good way to see how founders have been creative in managing like very uncertain situations. I mean, it's never enough cereals. The second example I briefly want to touch upon is Etsy, the global marketplace for handmade and vintage items created by crafters and artists. I think what you should appreciate here is that Etsy has been founded in 2005. And I think where nowadays it's very common that you build a niche marketplace focusing on a specific sector, at the time that Etsy was created to build a marketplace for craftsmen and artists was actually quite unique. The founders of Etsy, they really identified an opportunity in the sense that they saw that most of these craftsmen and artists were only leveraging offline sales channels in order to sell their products. And they did not make use of the thing that was the internet. And this is where kind of Etsy came in, and they really wanted to become the digital storefront to all these creators. And this sort of focus on this sector resonated extremely well with all these craftsmen, because they were all looking for a place online where they could actually showcase all their creations. And by really having this laser focus on this customer segment for very, very long, Etsy managed to build a community of now more than 7.5 million creators that are effectively selling their products online. This industry of like vintage and handmade products was also plagued by fake products and low quality products. And Etsy did an amazing job by ensuring exceptional quality control to build further trust in this environment. Now, of course, these days, for everyone here in the room, having quality control on your supply side is pretty standard. But at that time, Etsy was really pioneering this by being the first one to implement guidelines that would ensure the quality and also the authenticity of the products. Finally, a more recent example, I think, where Etsy displayed great ways on how they handled uncertainty was actually in the period of COVID-19, where obviously many of the crafters were struggling because they were not able to sell their products in brick-and-mortar stores and at trade fairs. Etsy kind of came in by really changing the positioning of Etsy to the global hub for handmade face masks and other pandemic-related items. And I think it's a very creative way on how they managed that situation. Now, these examples of Etsy and Airbnb might sound very trivial and they might seem small, but I think they show in great detail how these companies have actually used uncertainty as their friend. Because at the end of the day, the world that we all live in is a very uncertain place. And there will be many events where you, as an individual founder, have actually zero influence on. So the only thing that you can do is kind of show your resilience and show your ability to change gears when needed. Now this slide shows, it's a bit of a variation of the slide that we used last year, but it kind of shows in what year specific marketplace businesses have been founded and against what macro backdrop that actually happened. And as you can see, throughout the last 15 years, there have been many crazy global events, but it did not prevent any of the founders to build something amazing. So the big takeaway here is this: builders keep building no matter what happens. Now at Speedinvest, we fundamentally believe kind of like in the human ingenuity and our ability to navigate change and uncertainty. I think we have done, as a society, we've done extremely well in navigating COVID-19, for instance, and we're now seeing this clear push where we also start to harness renewable energies as we try to move our society to a much more sustainable future. So humanity has always been rising up to the occasion. But I think one interesting trend to highlight is that we see an increasing efficiency of technology adoption, especially on digital platforms, as society becomes more connected and more digitally native. And I think the best example of that is actually ChatGPT, that thing that took the world by storm. ChatGPT only took 5 days to reach 1 million users, and with that, they really outpaced many of the other digital platforms that we saw before, like Netflix, Airbnb, X, formerly known as Twitter. Now, before we kind of like wrap up this opening keynote, we just want to touch briefly upon two topics that will also be discussed in much more detail today by much greater specialists, to be fair. But the first one is, of course, AI and the way how we think it will reshape the marketplace landscape. We saw this rise of ChatGPT, and it's super interesting to see now how actually many founders are starting to experiment with these new AI technologies that have come online. And I think we all realize it's still super early days, but at the same time, I do want to highlight some pockets where I see potentially great innovation. First off would be that there's an opportunity to actually have a truly personalized shopping experience. You know, a shopping experience that goes beyond personal recommendations based on previous transaction, but one that actually caters the whole customer journey exactly to your unique needs. On a similar vein, I also see changes in advanced search and discovery. We'll probably forget quickly about keyword-based search because we believe that AI will be much better in understanding context, but also intent. So it will be able to provide better answers to your questions. AI will likely also take a much more operational role in organizations and take on things like dynamic pricing optimization or supply chain management. And I think there really is a future where AI doesn't only predict demand, they also change prices, it will manage inventory, and will, at the end of the day, make sure that the products will be delivered at the right place at the right time without any or much human intervention. Now, similar to the advent of the internet and similar to the advent of mobile, we believe that AI will be creating a new set of winners that we also saw with these other two previous technology jumps. But given the rapidness of the adoption of AI, we believe that those winners might emerge way quicker than happened before. Now, the second change agent we want to discuss is Gen Z. These people that are being born between 1995 and 2010. And this generation will be much more than just a demographic. In fact, we really believe that they have a very different behavior that will ultimately have a reshaping effect on the whole marketplace industry. There we go. So what's important here to note is that Gen Z, even though you might not realize it, is already 26% of the global population. So if you're building a marketplace business, but you're not able to meet the expectations of this new and very different generation, you might actually have a pretty hard time to build a successful case. So what are some of these changes that we actually see with this new generation? Well, first off, I think they have very different shopping habits. Much more than any other generation, Gen Z is using mobile for everything from like product research to ultimately also product purchases. They also rely way more than any other generation on recommendations from peers, but also influencers in making purchasing decisions. And with that, we also see a rise of live stream shopping events, which also increasingly blur the lines between entertainment on the one hand side and shopping on the other. And this new behavior, we think, will also have a profound impact on retail, as retail will need to adapt in order to cater to this new demographic. Brick and mortar is not dead, but Gen Z will have a very different expectation towards the experience that they have in shops, as it better aligns with their overall customer journey. Now, I found this quote from The Economist actually pretty funny, which is, woke, broke, and complicated, businesses should take note. And Gen Z, more than any other demographic there was before, actually has much more social and environmental awareness. In fact, they're pretty much like a value-driven activist, and they use their wallet as their weapon. And close to 90% of Gen Z believes that businesses should actively be involved in addressing societal and environmental matters. So if you're building a platform that aligns with the values of this new generation, you will be much more likely to get them as a customer and to receive support from them. Now, this new generation that comes up, Gen Z, as well as the rise from AI, are just two of the examples where you have to navigate uncertainty as a founder. And as we saw in the presentation, also the change in the financial markets are one of them that you have to deal with. So we'll end this presentation with a simple quote from Marie Curie, who said, "Never let oneself be beaten down by persons or by market events. Don't see change as a barrier. See it as an opportunity, as a chance for growth and for new horizons." So with that, I hope you all will celebrate change and navigate the marketplace landscape successfully. Thank you. I hope you have an amazing day, and make sure to also reach out to our team, which is here on the slide. Thank you very much.
All right, thanks a lot, Jeroen. You're not done yet.
Okay.
You're not done yet. Let's check for a couple of questions from the audience.
Oh,
maybe.
okay.
If, don't be shy.
Damn it.
But maybe there are some questions left, so let's check.
I'm also happy with no questions.
No question. I mean, I have one question then for you.
All right.
You talked about that later stage funding kind of dried up, and on the other side we saw those giga funds being raised like in 2021. And there's a lot of capital on the banks of venture capital funds. So what do you think will happen with this money? When do you believe the floodgates will open in terms of navigating uncertainty in the fundraising environment?
That's a very good question, where I think most venture capitalists have a very poor answer on. I think, in general, like venture capitalists are very poor when it comes to predicting the future. So I would take everything I say with a very big grain of salt. Yes, it's true. I think a lot of funds raised a ton of capital, especially to deploy that in the later stages. But the problem right now is that there's still a lot of uncertainty in the public market, which is usually taken as a starting point for them to start to invest in later stages again. Now, the IPO of Instacart went, I think, reasonably well. And if we're kind of continuing on that path, I also expect there will be an uptick in later stage financing becoming available again. And that's also, I think, some of the feedback that I get when I talk to later stage investors. So the money is not necessarily gone, but there's a lot of uncertainty. And when there's a lot of uncertainty, also investors are like, okay, I'm just going to sit on my hands for a bit and wait this out. So I think we're in that interesting process where we're all just kind of like observing what happens. And hopefully there will be some of them that are a bit more bullish and start to deploy more capital, because I think that's where we would ultimately all benefit from. I mean, ultimately VC is actually a fairly small category. But yeah, the industry would obviously really benefit if those later stage funds are coming online again.
Okay, thanks a lot.
All right.
Right.
Thank you.
And